What is going on, Future Focus Nation? My name is George and I talk about investing on this channel. And today I wanted to talk to you about a stock that I know is very undervalued right now. This stock belongs to a special purpose acquisition company, or SPAC, and the ticker symbol is GIX. Now, this company will be conducting a reverse merger with two companies. One company is called Cloudbreak and the other company is called UpHealth. Both of these companies are in the health sector. When you purchase this SPAC, you are actually getting two companies for the price of one. Today, I'm going to do a deep dive into GIgCapital, the company that owns the special purpose acquisition company, into UpHealth and into Cloudbreak, to try to help us and identify if this company is a buy right now or not. Before we get into all of that, I want to thank all of my subscribers. We are almost at 100 subscribers, and that means a lot. It takes a lot of time to put all these videos together and edit them. So the fact that you guys are subscribing, it truly means a lot to me. But with all that sentimental stuff out the way, let's get right into it. So GIgCapital is the first private to public equity PPE business and technology executive group that focuses on a mission of taking late stage growth, high quality, sub-unicorn private companies to the public market with an IPO in a box methodology as an alternative to the lengthy traditional IPO process. GIgCapital 2, ticker symbol GIX, was created in June 2019 to partner with ambitious entrepreneurial late growth private companies to enter into business combinations when the appropriate opportunity arose. They obviously arose. GIgCapital 2 announced that it has entered into two separate definitive business combination agreements with each of UpHealth, one of the largest national and international digital healthcare providers, and Cloudbreak Health, a leading unified telemedicine and video medical interpretation solutions provider, respectively, to form a combined entity that will create one of the only profitable, publicly traded, comprehensive global digital healthcare companies. Upon the closing of the transaction, the combined company will be named UpHealth Inc. and will continue to be listed on the New York Stock Exchange under the new ticker UPH. So for those who don't know about SPACs, the ticker changes from just what it was when it was just a SPAC to a new ticker when the companies actually merge. Now, this is the most recent news from GIgCapital. So on February 24th, GIgCapital Global Sponsor SPAC reminded stockholders to vote in favor of an extension. The reason they're asking for an extension is that whenever there's just a special purpose acquisition company and they don't merge with anybody, they only have a limited amount of time that they can stay on the New York Stock Exchange. In order to remain on the stock exchange, they need permission from their stockholders to stay in it. Sometimes some of these mergers take a long time, even when it's just one company. And now this SPAC is attempting to merge with two separate companies at the same time. So you can see that it could be a lengthy process. On January 21st, GIgCapital Global sponsored SPAC raised $285 million in conjunction with its planned business combinations with UpHealth and Cloudbreak. So now let's talk about UpHealth. At UpHealth, they are focused on making healthcare experience as easy to engage with as possible for providers and patients. As a focused global digital health services company, they empower patients and care providers to engage in a personalized, frictionless, and integrated care experience. Their mission is to bring technology and services to efficiently and profitably manage chronic and complex care, including behavioral health and substance abuse, while also serving the demands for easy access to personalized primary care. Their vision is to enable the long-promised digital transformation of healthcare for patients, care providers, specialists, and non-healthcare service providers. Now, if you've watched some of my videos on other companies, you know that it's important to know who's leading that company that you're going to invest in. So here you have the co-chairman and co-founder. I'm going to butcher this name, but it's Dr. Chiranjeev Kathuria. Dr. Chiranjeev Kathuria is an Indian-American investor, business person, and philanthropist. Dr. Kathuria co-founded several leading companies in the medical field that include American Teleradiology, Nighthawks, Ocean Biomedical, and UpHealth. American Teleradiology Nighthawks merged with Nighthawk Radiology Holdings, and the combined company went public on the NASDAQ. Dr. Kathuria also co-founded Ocean Biomedical, which recently announced a malaria vaccine discovery. So you can tell that he has had success leading companies in the past. So these are the four segments that they offer. They have an integrated care management platform, which is a comprehensive technology platform to manage health for people with complex medical needs. They have global medicine, a digital front door enable proving affordable and accessible solutions that bridge healthcare disparities. They have a digital pharmacy, full service e-pharmacy capabilities serving complex patients population. They have a tech-enabled behavioral health, rapidly digitalizing mental health and substance abuse, acute, chronic, and inpatient. So their 2020 revenue was 115 million. Their 2020 estimated EBITDA margin is 12%. If you don't know what EBITDA means, it's earnings before interest, taxes, deductions, and amortization. They have 50 state RX licenses, which is pretty huge. Here on the bottom, you see the sectors that they serve. So they have healthcare systems, health plans, government ministries, employer health, and education. UpHealth addresses critical needs in healthcare delivery. So on the left, you see the problems that exist. And on the right, they're trying to tell you how they solve those problems. So on the left, you have aging populations. On the right, you have enabling a critical shift in care setting from the clinic office to the home, which is making it more convenient for persons, especially after the pandemic, when a lot of people are afraid to go out. You know, we don't know how long that will last. And having them being able to be served while they're at home is something that's really big. Inequitable access. Over half of the world's population cannot obtain essential healthcare services. And over here, they're improving access to healthcare, making it easy and more affordable. Here you see the 1,800 healthcare venues in the US and overseas that UpHealth's digital health services are currently being utilized with. The academic sector, you have these schools here, specialty, these different locations. Here's the community spaces, and here's like the government sector. So UpHealth serves people in the United States and abroad. They're strategically selected digital health capabilities addressing a global market need. A unified platform streamlining the delivery of effective, affordable care. So they have a diversified revenue base and unique position in the market. There's significant growth at scale with an established US and an international footprint. Substantial visibility into accelerating growth and strong profitable for reinvestment in growth. Profitable business lines enable substantial reinvestment in UpHealth's growing engines with platform synergies, offer upside beyond the 24 million EBITDA forecast for 2021. And this is just speaking about research and development, that they're willing to put and have the capability to put more money back into themselves to make themselves better. I like this slide right here because it gives you a look at themselves versus their competitors. So here's the 2021 revenue growth at 69.3. These are the competitors. So you have Teladoc, you have OnTrack, you have GoodRx, which you may have heard of. On the right, you see that the peer group mean is sitting at 39.9%. So they're above the mean. Their EBITDA margin is at 12.4%, and they're above the mean there as well. Now, when you compare the financials to their valuations, it makes this seem even more attractive because you can see that the peer group mean is sitting at 12 times. And over here on the left, you have UpHealth, and they're sitting at 6.9 times, which leaves them in the bottom third of this group. In a nutshell, this means that if you're purchasing them, you're getting them at a cheaper valuation than a lot of their competitors. So you saw UpHealth and you saw what they had to offer. Now let's take a look at Cloudbreak and see what they have for us. This is a quote from Jamie Edwards, the CEO and co-founder of Cloudbreak Health. Combining with UpHealth and its complementary suite of solutions will further our ability to power healthcare's digital transformation and resolve disparities on a massive scale. We are proud to be part of this mission together. And this right here is Jamie Edwards. Prior to Cloudbreak, Jamie was the CEO of Emergent Medical Associates. During his tenure, EMA grew into the leading multi-specialty group in the Southwest United States. He remains with EMA as a board member. He is also a board member for Santa Monica chapter of the American Red Cross, the Young President's Organization, and a mentor at the LA incubator Start Engine. If you've never heard of Start Engine is a company that startups use for crowdfunding. At the end of this video, I'll post a video that I made on Start Engine. Jamie is also a proud member of the Pink Sox tribe of healthcare innovators working to disrupt healthcare from the ground up and drive positive change for patients and providers. He received his MBA from Cornell Johnson's Graduate School of Management. Now, when the merger's complete, these two companies will obviously become one, and Jamie Edwards will no longer be the CEO. His role will shift to be the COO of the new combined company. Cloudbreak's mission is a team of innovators dedicated to building solutions that address the healthcare disparities impacting patients across the nation. They fight for a future where patients can receive care at any time, in any place, on any device, and in any language. They develop platforms that restore the joy in clients' work by allowing them to focus on people instead of technology. Their tech is easy to use, reliable, and scalable. So telehealth has become a necessity for safe and comprehensive care. Providers can increase their impact without comprehensive telehealth. Teams can answer video calls, care for patients, converse with colleagues, and connect with a qualified interpreter, all from one location. Their technology is available on iPhone, iPad, browser. Cloudbreak Telehealth solution ensures providers can connect with, communicate with, and care for patients no matter the barrier. Now, Marty is one of the technologies that they offer. Marty helps connect, communicate, and provide excellent care to limited English proficient, deaf, and hard of hearing patients. Their language access solutions integrates with EHR, telehealth, and patient experience platforms to help take language access whenever they need it. They have qualified interpreters that are work 24/7. They have 250 languages. It's easy to use that even children can use it. It's interoperable, so it works in different platforms in different situations. And most importantly, it delivers better outcomes. It reduces the risk and improves patient satisfaction with clear communication and more compassionate care. Like we talked about, they're available on iPhone, iPad, and browser. So I placed this slide in here because I thought it was important to see how they grew from 2019 to 2020. And adoption in telehealth increased over 46%, and we all know why. But I think it's important because who knows how long it'll take for us to go back to normal, or in the medical world, if this is the new normal. And if this is the new normal, this company has a lot of room to run. So here's some of the latest news from Cloudbreak. On January 26th, the SPAC raised another $285 million ahead of the merger. February 9th, Cloudbreak soared from near closing to going public as part of a $1.4 billion company. There were times when, to make payroll, Andy Panos didn't pay himself. Now the business he founded is going public. Look at that. And then here, as always, you want to see what companies you're invested in. They're partnered with somebody. So Macro Trials begins partnership with Marty, which we talked about what Marty was. So here's a summary of the transaction of the merger. Here on the bottom right, you see an illustrative post-transaction ownership breakdown. 75.5% of this company will belong to UpHealth and Cloudbreak. 12.4% will belong to GIgCapital 2 public investors. 8.6% will belong to PIPE investors, which is venture capitalists that got in before the merger. And 3.4% will belong to GIgCapital 2 sponsors. Now let's take a look at the chart. So here we have the 3-month chart of GIgCapital, ticker symbol GIX. And I have the 50-day moving average here on the bottom. So you can see that currently we are under the 50-day moving average. The stock closed yesterday at $10.14. The closing high during this period was $11.59. You see here that the company has lost some traction and kind of deflated, but this is because, as you saw, they are asking for an extension for the merger. When this happens, investors in the SPAC get frustrated and they end up selling. Here you have the 5-day chart. You see that it's fluctuated from as high as $10.25 to as low as $10.02. Now, whenever you're investing in a SPAC that hasn't merged yet, there's always a chance that something can occur and the merger doesn't happen. If that were to happen, this stock can really plummet. However, I think that all three companies here are very excited with the prospects of what can be when all these companies merge together. UpHealth within itself seems like a very diversified company. And now you're adding Cloudbreak into that to further diversify their portfolio and extend their reach on the total addressable market. So what am I doing? I personally bought 100 shares yesterday at $10.10. And if the stock drops below $10, I'll buy some more. My prediction is that once a merger date is announced, this company is going to skyrocket. And you can see the price of this stock jump up another 50 or 100%. I'm bullish on the long-term prospects of this merger because they're in a market that is not something that we want, like an iPhone. It's healthcare. It's something that a lot of us need. But what do you think? Is this a company that you want to invest in? Are you interested in it? Or are you going to pass on this one? Let me know in the comments below. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. Until next time.